Stacking surfer. I think I'm your best friend. Balances in your bank and stack. What's up, everybody? Stacking Surfer here. I've got a great guest today. You guys know him by many different names, but we're going to call him Andy Schectman today.
Yeah. Those names, depends upon who's watching. I hope they're not too derogatory, but
they're usually pretty good. So sometimes Andy's called the time traveler because he's been so good at seeing the trends that are coming up. But Andy Schectman, the CEO of Miles Franklin. Today we've got a good show for you guys. There's a lot going on in the news. There's a lot of information right now circulating around Bitcoin, around silver, around gold, around escalations in the wars. There's also a lot of conversation going on around a Bitcoin reserve. What would that mean? How does that affect gold and silver stackers? So we're going to hit a bunch of that today. And we will have a little bit of time. Today's a little bit tighter, but we'll have a little bit of time for Q&A. So what I'm looking for from you guys is just go ahead and put your questions in all caps. That way we know what to look for, and we'll get to that towards the end of this. But Andy, what's on your mind the most right now? What's concerning you the most about the market? Or maybe it's not a concern, but what's something that's most on your mind today?
Oh, I think in general, what's been on my mind is the price drop in gold and silver and people's overreaction to it. I think it was just that, an overreaction. You have massive short positions on both Comex and the LBMA by the commercial banks, who have been getting blistered by the continual rise in the price of gold, really, and silver, really engineered by the countries in the global south who have been accumulating gold and silver hand over fist, amongst other commodities too, rare earths and base metals and even soft commodities. But we're seeing a drive to accumulate real things, which is a very dangerous position to be in for a commercial bank who's naked short. On Comex, in the case of the silver market, short between 750 and 800 million ounces, about a whole year's worth of global mine production. In London, many times that, between 4 and 6 billion ounces short, naked short, paper short, for whatever reason. We've talked a lot about that, the military-industrial complex and the need for silver. Those numbers are irrefutable, yet not calculated in the Silver Institute supply-demand number. Another 260 or so million ounce shortfall between supply and demand for mine supply this year, according to the Silver Institute. And yet you have 8 Western banks shorting the prices the way that they have been. And I think what it really was, this decline. And first of all, let's say the decline was in silver futures. Let's just focus on silver for a moment, and gold futures. But because really it's the futures market, the tail wagging the dog, that controls the price. It should be the other way around. It should be the commodity controls the futures, not the paper futures controlling the commodities. And it's kind of backwards. At least it's mitigated, or it's migrated to that phenomenon, one that may not last forever. In fact, it shouldn't be this way, but it is. And when you have very, very well-heeled banks who have the ability to create a reality through paper contracts, either long or short, it creates some distortions. And those distortions were very real. And I think this big decline in the futures over the past couple of weeks was a result of, or a belief, and I think the traders believe that that the people believe that the Trump administration was going to halt the upward trajectory of the irresponsible fiscal policy and the massive federal spending addiction that we have, bringing out Vivek and Elon to trim the fat. And of course, choosing Bitcoin over gold and silver as the next key component to the sovereign reserves, all of which I think is irrational. But they used that irrational exuberance to push the ball down the hill. And what we saw, and that being the shorting, they shorted the price just to get it going in that environment. And let me just simply say that everyone should be exuberant about the changes that Trump wants to usher in his cabinet, the changes, the addressing of the things that have made people wonder if we were living in bizarro world or not over the last 4 years. All of that's good, but the financial woes, the fiscal woes, well, they haven't changed, and they won't change under President Trump. And I think that was a realization that the traders had. And when we look at the commitment of traders report that came out, it indeed bears witness that that's exactly what did happen. The commercial banks reduced their short position by almost 16,000 contracts in gold at 100 ounces apiece, and almost 6,000 contracts covered in silver, meaning they drove down the price. The hedge funds all sold, locked in their profits, and it kept triggering sell stops. More selling begets more selling begets more selling. That's exactly what they wanted.
Looking at that, Andy, you brought up one thing that I've heard in the community too, is, Trump's administration is now talking about a strategic reserve of Bitcoin. There's a lot of hype around that right now. You haven't come out and talked bad about Bitcoin. You also, it's something that you have a little bit of, but it's not something that you're heavy in. I'm kind of in that same boat. I have a little bit of it as well. I look at it as kind of a hedge that I play out there on the technology side. But I think it brings up an interesting question. Countries and banks and businesses have traditionally used gold as more of a reserve for their assets, and this brings up kind of a new concept of a digital asset being put into that place. And so I think that's probably caused a little bit of hype and built that market up to a degree. But do you see any concern with the U.S. either adding to or taking away from the gold reserves that we have here? Do you see that being something that's mutually exclusive or something that affects, metal prices going forward?
You're right. I do believe that. I mean, I try and be very consistent in saying our two communities, our two camps should be complementary, not adversarial. In many respects, we see the same things. Now, I would argue, whether or not people want to admit this, that the Bitcoin camp is more concerned with making a profit, whereas the gold camp is more concerned with keeping what they've worked so hard to build their whole life. I mean, but the reasoning behind it, at least to walk in the door, is very similar. We see the same inefficiencies in a centralized government. We see the problems with holding your value in dollars. We see alternatives to the system as a way out. And I guess there might be some people who own Bitcoin because they think it's better than holding dollars from a preservation standpoint. It's very volatile, probably not the best place to do that. But nonetheless, the two camps should be complementary to one another. In fact, I think taking profits in Bitcoin and putting it into physical gold is probably one of the best ways people can be guaranteed of leaving the casino with money in their pocket. It's no different than every hand you win at the blackjack table. Put a green chip in your pocket, and when you leave at the end of the night, you'll have a pocket full of chips. And that would be my advice to people who own Bitcoin. And I own a very little bit, just enough to say that I won't punch myself if indeed it goes to levels that people think. It's not so outlandish. In a world where Bitcoin is going to be $100,000, why couldn't gold be $100,000? As crazy as that sounds, you take the central bank intervention out of the metals market. Who knows where price discovery would be with gold and silver? But let's just do a thought experiment. At roughly $130,000 an ounce, if the Treasury said to the world, any central bank that wants to give us their gold, we'll pay them $130,000 an ounce for it. What the hell does the U.S. government care? We can print that money just like that. And as foolish as that sounds, you offset immediately with the 8,300 metric tons supposedly held by the Treasury or by the Fed on behalf of the Treasury. It hasn't been audited since 1953, but let's just pretend it's still there. At at roughly 130,000 an ounce, your debt is wiped out against your assets. I mean, it's your balance sheet is nice. That doesn't take into account the unfunded liabilities. But
you make a great point. The one thing that is being left out of most of the news is the idea of revaluing the gold first. And so, what ends up happening is a lot of people just hear gold for Bitcoin, freaks them out. So I think that's a very valid point to bring up, and it makes a big change to the narrative of that too. So Andy, as we're talking here, I did have a question that came up that I thought would be a good one to hit as we're kind of going through our questions here. So Maja Kessel, I'm probably not saying the name right. Sorry about that. Heard that in Japan is selling U.S. bonds, but who's buying them?
Maybe it's Tether. Tether is pretty much, been gobbling. The rumor is that Tether has been soaking up all of the bonds that China and Japan are offloading. And it would make sense, actually. Wouldn't surprise me one bit at all. But someone has to be buying them. Maybe you listen to Jim Willey, he'll tell you that the Federal Reserve is handing money under the table to the United Kingdom and to Ireland and to the Cayman Islands, unless we're foolish enough to believe that those should be the largest purchasers of our U.S. Treasury debt. In other words, it's under the table monetizing to your friends, monetizing the debt. Here's the money, buy our treasuries. I don't have any proof of that. But the bigger question is, who in their right mind would buy treasuries of any duration? You'll be out of your damn mind to do so in an environment where, the 10-year yield is rising, inflation is here to stay, and the numbers by which they tell us inflation is really running at it, they're full of shit. We actually believe inflation's at just over 3%. I mean, I'd love it if that were the case, but it's much higher than that. It's just that the CPI doled out by the Bureau of Labor Statistics, called the BLS, should just remove the L from their methodology and call it the bullshit. That's what it is. And so I think buying a 10-year treasury is uninvestable, let alone a 30. You'd be out of your mind to take 4.5% or less for 10 years in this country, where money creation will run far in excess of that. You just have to understand that the government who produces these statistics has a vested interest in lying about what real inflation truly is. It's kind of like the way they pull things out. I think they call it hedonics, where in April of this year, coffee was up 85% year over year. So they pull it out of the CPI. Whether they replace it with tea or something else, because obviously no one's going to drink coffee because it's too expensive. So let's pull it out of the CPI and exclude things like food and energy and housing, things that have been inflated forever.
As far as I can tell, it's only going to get higher than where we're at today. And for me, that's why I've been stacking a lot of gold and silver. To your point earlier, people may not admit it, but the reality is most people that are into crypto today are in there to make the profits. And from my experience, most people that are into the precious metals are there to restore or to save their wealth, as well as to protect it. But we all have a lot of the same issues or the same concerns that we're going into. It's getting out of the fiat dollar, and it's getting away from things that can inflate into hard assets that we believe will outpace that inflation.
100%, man, because look, the bottom line is our government has the biggest debt or is the biggest debtor in the history of the world.
Yes.
And it's continuing to grow at a rapid pace, and it's an unstoppable pace. You can bring in Vivek and Elon and tell them to trim the fat. The truth of it is that you first have to address government spending, not just the waste in their bloated beast that they are. The last two payrolls, I think you have or employment numbers, I think you have pretty damn close to 800,000 government employees hired over the last two unemployment readings. I mean, that's just ridiculous as government or as private sector jobs are being shed. But you have to address government spending first and foremost, and efforts to reduce spending will be meaningless unless there's the political will, which ain't easy to make the cuts in things like entitlements, welfare payments, national defense, veteran benefits, Medicare, Social Security. I mean, come on, you think they're going to do that? They've already said they won't. And if they don't do those things, then forget about, even if you had a balanced budget today, you have the massive amount of debt that we've already accumulated. The Congressional Budget Office says that by 2031, 100% of tax revenue goes just to pay the interest on the debt and mandatory entitlement spending like Medicare and Social Security. And so while the government should be able to, I would argue, keep this charade going longer, any other entity on the planet, because we have the printing press, start to struggle or struggle or start to break when they struggle to pay their interest costs. And that's where we're at right now. A moment of reckoning is on the horizon.
The reason they charge high interest is not just to make a profit, it's to cover all of the fraud that's going on, like you mentioned.
Right.
When we do, we have price controls here in California in the form of Prop 13 with property taxes. So someone that bought a house in the 80s is paying like $1,500. Someone that buys a house here today is paying $30,000. Same house, right next to each other. It throws off the whole real estate market. It makes it so people don't want to move. It makes it so they can't move, things like that. With credit cards, I think what you're going to see is you're going to see companies aren't issuing credit cards to people under a certain credit score anymore. So it's going to take credit away from the people that need it the most. The other thing that you're going to see happening is you're going to see them starting to reduce the amount of limits on those credit cards. It's going to start shrinking.
Right.
So if anybody's, for those that are listening to this, if you've got a credit card you haven't used in a little while, it's probably a good idea to at least make a payment on, buy something on it, pay it off, just so that the card's getting used, because I bet they start shutting those down. So I would love to go longer, but today I do have a little bit of a hard stop. I did have one last question, Andy, for you today. And part of that question, I think, is also going to be a good kind of winding down here, but brings up, should I swap gold buffalo rounds for U.S. Mint gold buffalo coins? I think
I have no idea what the hell gold buffalo rounds are.
Let's say it's gold coins. Let's say he has gold buffaloes.
Yeah, but gold buffaloes are U.S. Mint. There would be no justification for trading gold buffaloes for gold eagles. Pre-33, okay, maybe. Silver buffalo rounds are generic rounds. I have never seen a gold buffalo round. In other words, the U.S. Mint makes gold buffaloes and gold eagles. They make silver eagles. They do not make silver buffaloes. And so the generic rounds very often are buffaloes. And a lot of people think that they're American made. They're not. In this case, if he has a gold buffalo round, I've never seen one before. That would be a generic coin, a round, not a legal tender coin. The only gold buffalo coins I've ever seen are those made by the United States Mint. Now, silver buffalo rounds are everywhere. Those are not U.S. Mint.
So I can recommend Miles Franklin, guys. I've used them before. My dad's used them, and it's been a good experience. So give them a try.
Say hi to Dad for me, by the way.
Definitely will. One of these days, I might have him poke in here if I'm up by him in Utah. So we've got to cut the show a little bit shorter than I'd like to, guys. There was one last.
Well, come on, man. I need a friend. Don't go.
There was one last question though that I think is really important. Just it kind of ties up what we started the show off with. So go back to the beginning of the show. If you guys were not here at the beginning, you'll get a little bit more of this that we hit too. But the angle I want to take here with the question, Andy, is, we talked about the announcements. We talked about some of the bullishness on crypto that's going on out there. Is there a reason that Trump isn't also throwing gold and silver into that equation in that conversation right now?
Well, it's funny. I like Kay Rudman's line of thinking. I would ask that question on a more, kind of a big picture. Is it interesting? And I look, again, I'm not a Bitcoin basher at all, and I own a little bit, but I find it interesting. Maybe this is what Kay is talking about. The central banks of the world who I would consider to be the most well-funded, but more importantly, most well-informed traders on the planet, right? This is the big boys club. These are the people that are talking to the BIS, the Bank of International Settlements, and the IMF, the International Monetary Fund. These are the people who are in the elite party, so to speak. They know the playbook. And what have they been buying at a level the world has never seen before? Gold and silver, particularly gold.
I agree, Andy. So I think first off, we're fighting the same battle. These two camps, they really don't need to be going against each other. There's definitely a lot of rhetoric that goes around on X and other platforms between the two, which is better all the time. Price is the thing that always gets considered, and everything else gets dropped, which is unfortunate. But for me, I'm very heavy into gold and silver. I do have some cryptos, but for me, that's more of just kind of a side thing. I do it based on technology stuff. I'm a technology guy. So it has to have a reason for it. But when it comes down to protecting my family, I don't see anything better than the physical stuff that you can put into a safe. And so that's what I do. But Andy, I want to thank you for coming out.
Hey, real quick, last thing, I know you got a hard stop. Christine Stevenson,
Okay.
our prices are way lower than JM Bullion, who's a fine company. And we have free shipping on a larger amount, not on $200, but the most our shipping ever for fully insured shipping is $15. And we do it, I do it lower because I own the company, but our company policy is free shipping on 500 ounces of silver or more, or 10 ounces of gold or more. I do it about half that amount. I do it on 5 ounces of gold or 100 ounces of silver. But the most you're ever paying is $15. I can finance it myself. I don't ask my brokers to do it. But even if they didn't, it's $15. But our prices are typically far lower across the board than a fine company like JM Bullion, who I have nothing but respect for. So if they weren't a great company, I wouldn't phrase it quite that way, but they are. No reason to switch. But I just want people to know that, give us a call, give us a chance to explain it to you. I think you'll be glad that you did.
Perfect. Well, Andy, thank you again.
You're the best, brother. I wish you nothing but the greatest Thanksgiving ever.
You too. Happy Thanksgiving.
Happy holidays to you and your family. And let's chat soon. Look forward to picking up where we left off. I won't be here next week. Yep. I'll be traveling in Minneapolis, going to see family for the holidays. But right after, let's pick up, and I'm sure there'll be lots to talk about as we head into the end of the year.
For sure.
But thanks, as always, for having me, man.
Well, thank you very much, Andy. We'll talk soon.